also pay attention to income tax. In a sole trader and in a partnership, the owner is responsible for paying income tax on the money received. In a company, the company is responsible to pay income tax on the profit that was made. So at the end of the previous year, the business did not pay enough money for income tax, therefore they owe 4,000 Rand. On the 14th of March, an amount is issued for 4,000 Rand to pay out this outstanding amount. So we issue a check to reduce the debt, and we will indicate in the bank account that the money was paid out to SARS for income tax, 4,000 Rand. So that is the debt of the previous year. On the 31st of August, we issue a check as provisional tax payment. This is a very important terminology that you must understand. SARS doesn't want to receive money only once a year. So the companies have to do a little income statement in the middle of the year, determine more or less how much is the profit, and calculate income tax on it, and then they pay a provisional tax payment as part of the debt on the profit that they will make. So when we issue this check, we will credit the bank account, and we will show that this check was issued to SARS for 30,000 Rand. SARS will be debited with 30,000 to indicate that this total debt that we will owe them will be decreased with 30,000. So on August the 31st, we will issue the first provisional tax payment of 30,000. You are not allowed to write that 30,000 in the income tax account because we still don't know what is the actual tax. The only time that you will write in the income tax account is at the end of the financial year when you calculated the final profit for the year. At the end of the financial year, you will do a small income statement again and determine more or less what is the profit, and then we will issue a check again to SARS. So we will reduce the money that we owe to SARS with 40,000 Rand. And we will credit the bank and show that we paid money to SARS, 40,000. So very important, the income tax account is a no-no account. You are not allowed to write in it before the final profit was determined. Now you will do the adjustments, and the books will go to the auditor, and they will instruct the company to change certain things. And by the time that the auditor is satisfied that the books are according to GAAP, that you will determine what is the profit of the year, 200,000. And on that profit, I'm going to work out the 30%, and I determine that the actual income tax that we must pay for the year is 60,000 Rand. So for the first time, I'm allowed to write in the income tax account to show that this expense that we are paying is 60,000. Who do we owe this money to? To SARS. So it means I will credit my liability to increase the liability with the amount that we are supposed to pay to SARS. And we will show that the liability increases on the credit side. We will debit the income tax account, and I will show that this will be posted to the SARS income tax account, 60,000. After we've completed this, we will work out a balancing figure. So if we look at the debit side is 74,000, The credit side is 64,000, so we actually paid too much tax to SARS, and our balance is the difference between the debit and the credit side, 10,000. And we will add up to indicate that the total is 74,000 on both sides. And I will bring down this balance on the debit side on March the 1st, balance brought down 10,000. Now, what's very important with this SARS income tax account is that you must remember that if we pay too much provisional tax, we will have a debit balance. Then it means it is an asset for the business, and it will record it in your balance sheet under current assets. If we didn't pay enough provisional tax and the balance comes down on the credit side, then it is a liability for the business, and it will be recorded in the balance sheet under current liabilities. Income tax is an expense. Expenses must all be closed off at the end of the year. So it means that I will credit this income tax account, and I will show that I will take it to the appropriation account so that I can close off this expense of 60,000, and now we don't have a balance in the expense account.